Welcome back. As promised, we get chatting with Shree Digvijay Cement. Remember, the company reported a very strong number. That's in Q4 and for the year as well. Things looked very good. So how was the past quarter? What's the road ahead? And what's the outlook for the cement industry? We have Mr. Anil Singhvi, Executive Chairman of the company, who joins us on the line now. Hi, Mr. Singhvi. Thanks so much, sir, for joining in, and good to speak to you after a while. Well, if you could give us a few details before we get chatting about your past quarter. What is the current capacity utilization levels that Shree Digvijay Cement is functioning at? And what was it in the previous month? So what's the improvement?
Well, as you know, we went for a complete lockdown from 24th of March. So from 25th March to about 10th of April, almost about 17 days, we had to shut down the plant because of the government notification on that. But post 10th April, we have started manufacturing clinker, and then the dispatches started. So April, we lost almost about 15 days of both production and dispatches, but last 15 days have been pretty okay. May, as we look at it, there is a pent-up demand for cement, and going forward, we believe that it should be catching up with a next 15 days, catching up very well, because most areas are opening up now.
Encouraging to hear, Mr. Singhvi. You're saying that after 15 days of a shutdown, in the last 15 days, you're seeing demand coming back, and there is pent-up demand. Now, that's an encouraging sign coming in from you. So things looking, like they can come back to pace. So pretty good news. If you could give us a rough number, sir, in terms of sales volumes that you did in the past year. Were you at optimum capacity utilization levels? And also, what is the expansion plan going ahead? Because as of now, it's just 1.2 million tons odd.
Yeah, so as you know, it's been just about a year since the management took the control of the company from Brazilians. We are now seeing the demand for Kamal brand, because it has to be established again, because Kamal brand wasn't then an area of focus and area of emphasis for the Brazilians who were running the operations of the plant earlier. So to answer your question very simply, last year was a year of change of control and change of management, as you've seen it. And going forward, I'm pretty confident that Kamal brand will be re-established in the Gujarat market, which it has done last 2 quarters, as you've seen from the results. So we are now a premium brand in Saurashtra market. And fortunately for us, since we are a small player, we don't have to really look for a very larger area for sale of our cement. I think the COVID-19 has done one thing, is that it has really made everyone look inwardly. It's not outward-looking situation. So we are not looking at India, we are not looking at Gujarat, we are looking at Saurashtra. So I think so long as you can cater to the demand in the neighboring pockets and neighboring areas, you're pretty good. So I think smaller players are having that advantage as compared to the biggies. So if you ask me a question for a very large cement plant, what capacity utilization would be, it would be perhaps much lower than the smaller players. So I think the world has changed to a very large extent in terms of, if you are small, you are beautiful.
Okay, well, that's good to know. Things are definitely changing. Mr. Singhvi, good afternoon. This is Sonia here, and I hope that you are safe and in good health as well. Just a little more details on this pent-up demand that you were talking to Nigel about. Are you seeing demand that the industry is servicing pre-COVID? So, are these the orders that had come through before and that are being executed now? Or is there fresh demand that you're witnessing? And if yes, which are the pockets where you see demand coming from? Is it in infrastructure? Is it in real estate, housing? Can you throw some more light on that?
First of all, in terms of order and execution in cement industry, as you know, it doesn't have a much of a lag effect. So if you get an order today, it can be executed in next day or two. So it's not pre-COVID demand. It's a demand which is opening up now because of the monsoon. So pre-monsoon, there is a lot of expenditure incurred at every level, be it your incomplete house, be it the repairing of the house, be it the government expenses, be it some infrastructure. Like, in Bombay, any other thing is stopped, but you still have the metro work going on because they have to seal what they opened up before. So all this kind of things do require cement, and since we were completely closed down for almost about a month, for April, for the industry I'm talking about, there is a demand for pre-monsoon work to be done. So we are seeing, I think most pockets are seeing opening up of the market and opening up of this kind of a demand. Now, second question is in terms of real estate. I think most people have talked about that migrant labor has gone and construction labor has gone back. And when will they come back? I think this is an issue which is engaging the mind of everyone, be it real estate, be it pharma companies, or be it any other, wherever labor is involved. But my sense is, having seen 40 years of industry, my sense is that The migrating labor may have gone out of fear, may have gone out of hunger, may have gone out of many other reasons. But he'll come back because I think the employment and a continuous employment in the cities and the metros will bring him back from his village. He came from village to earn his livelihood. He did not come for the liking of the cities or liking of the metros. He came to make two ends meet. So he'll come back again. It's a question of how we can handhold, how we can bring him back. The labor contractors will have to rise to the occasion. The factories and the companies will have to make arrangements for them to come back and get employed again. I think as a nation, we have to now rebuild only one thing, is to bring back the labor, whether it is government, whether it is private sector, everyone. I think we need to have them back. They got scared. We did not hold them well. We did not even give them enough situations on this. But I think we owe it to them to bring him back. And according to me, life will not be, people are working out and putting out all sorts of stories. Life is not so simple that we can work out. I mean, I've seen enough mathematical models to suggest some numbers and all that. It's not a numbers game. A virus will remain in the society. You will deal with it, and not with the fear, but with the confidence.
Absolutely. And in fact, a lot of companies are putting in, safety and sanitization SOPs in place so that things can be worked out in the new normal, so to speak. But the other issue I wanted to discuss with you is what's happening with logistics, because we still hear that the supply chain is not so smooth. In fact, for sectors like cement, trucks availability is becoming a bit of a concern. Truck drivers as well, as we know, there's been this whole migrant worker exodus. But what is the situation on the ground now, and what has your own experience been?
I think it is coming back. I won't say that it has come back or it will come back to normal very soon, but definitely it is coming back. It is not as difficult as people are making out to be. Many a times people just exaggerate situation both ways. I mean, people look at too optimistic situation and people look at too pessimistic. I don't think many times people look at realistically that if situation is bad, it will take a time. And what are our efforts to bring him back? If I have to bring back the driver, what efforts am I making to bring that driver back on the payroll and onto the work? So I think we often keep complaining. We often keep complaining about the government, administration, and all of that. What have we done as an industry to hold him, to hold his hand up, or to give him that kind of assurance that he would have stayed back? In our case, I think we have done an excellent job. I can share with you that all our factory people, all our staff, most of our transporters, we handheld them. We told them that, yes, even if you do not have 30 days of work, we will pay you enough so that you're back in business on that. I think that hand-holding has to be there. We often take all these things for granted. Life is not to be taken for granted. Life is to work proactively and to deliver.
So you have been hand-holding all your staff. So full marks, sir, to you as well as to all the,
But this is the civic sense. This is how the societies are built. Societies are not built on that I will make money and you will just starve. It doesn't work.
Right. So quick point on that. So there have been no salary cuts and no employee job losses at the company itself?
No.
Not. That's good news, sir. Final question then. The stock has been a big outperformer. Everyone's talking about the markets being volatile. In the last 1 month, the stock is up nearly around 35% on the back of good numbers. But if things have to, progress, and in terms of all your investors will be happy to know what's the plan about the cash you have in your books. I think you have roughly around 75 crores in terms of cash in books. Will you be using it for some kind of expansion? Do you have a plan in terms of, do you have the land? What's the total land size that Shree Digvijay Cement operates on, and how much of it is free for expansion purpose?
No, we have enough land. In fact, we are one of the oldest plants. So in terms of land availability, we are very fortunate. We can have expansion lines without buying even an inch of land. So that's not an area of concern. You asked about the cash. You would know, and you would have noticed that after 33 years, we have declared a dividend. In Digvijay, so shareholders have waited for long enough. It's one of the oldest cement companies in the country, and I think cash will be utilized all three ways. One is, of course, to pay back to the shareholders. B is to look at for some expansion plans, and D thereafter look for some acquisition. So as and when we go along on these issues, I don't think Digvijay will not be participating in cement growth story. And my last point on this whole situation of that whether cement demand will be down 20%, I heard many of your analysts coming and talking. I bless them with all the wisdom which they possess. life is not 20% up and life is not 20% down. Last year, demand was degrowing by about 2 to 3%. Before that, the demand grew by about 8 or 9%. So if I look at the average of the 2 years, I am not as pessimistic as most of your analysts are coming in, that 20% degrowth will be there on cement. Life will come back. I'm a big votary of that things will happen again. Yes, we will have to adjust to the new normal, but I think life will come back.
And we are seeing signs of that across the world, right? I mean, in China, I was reading a report which indicated that oil demand has come back to pre-COVID levels. So that's the kind of big pent-up demand that we're seeing. So hopefully what you say comes true, Mr. Singhvi. Just one final question has it been very challenging for companies like Shree Digvijay to manage costs? I know you briefly spoke about that, but you know, whether it's employee costs, a lot of the other fixed costs, salary, land, rent, etc. Has it been very challenging, and do you think working capital will be an issue, not just for your company, but for the industry for a while?
I don't think the cost in cement industry, particularly the fixed cost or the manpower cost, is a very large cost. In fact, you asked me a very good question. The largest cost on my balance sheet is my GST. I pay 28% GST. In fact, you'll be surprised that now cement will be perhaps the largest GST contributor to the government of India. So to my mind, I think if industry has to come back, if the GDP has to be restored, agriculture and construction will be the only two ideas with government, because they are the largest employer of people, and cement is the largest contributor for the GST. So having said that, my fixed cost is not very high, be it employee cost or be it running the operations cost. The cost is essentially the transport cost and the GST cost. Transport we can manage, we can control, and we can bring it back on that. But GST, I think government has to really look at whether cement should be taxed as a sin tax of 28%. Now, secondly, whether the industry will find the working capital as a problem. I think those companies who have a very levered balance sheet will find it difficult. But those who have a reasonably good balance sheet, like companies like us who are sitting on the cash and no debt, obviously will have a much bigger and better advantage on that. But definitely those companies, and this is, I think, across industry, particularly for the capital-intensive industry and working capital-intensive like cement, that they will find it difficult if they have a very high leverage already sitting on the balance sheet.
Got that point. Thanks so much, Mr. Singhvi, for stopping by and filling us in with your take on the cement industry on Shree Digvijay Cement as well. And the final point in terms of GST cut, well, currently at around 28%, cement companies pay roughly around 55,000 to around 60,000 crores. Or if a 10% reduction is there, if at all, then that's 20,000 crores in terms of a revenue loss to the government of India. So just keep those numbers in mind as well. But for the time being, Mr. Singhvi says that maybe in fact GST at 28% is very, very high for the cement industry, and that's one part that he believes that it's on the higher side. Well, on that note, we'll slip into a short break. You come back and Prakash Gaba will tell us his trading strategy on the Nifty as well as a couple of other stock trading ideas.